Hello, welcome to the European Open briefing for Thursday, June the 22nd. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So there's quite a bit of risk of sentiment this morning, and that's mainly due to the continued rout in oil prices. Yesterday we saw US crude fall to 10 months low, and this has hurt energy and oil stocks globally. We saw US shares yesterday close lower again, as well as in Europe and in Asian markets again this morning. And the risk of sentiment is hurting the dollar, particularly against the Japanese yen. The yen is of course, together with gold, up this morning due to that risk of mood. The pound, though, is doing a bit better the past day or so, mainly due to another hawkish member of the MPC supporting a rate hike soon by the Bank of England, and this, of course, is in sharp contrast to the very dovish comments we had from Mark Carney earlier in the week. And another notable mover this morning is the New Zealand dollar, which, although the Reserve Bank of New Zealand, after its policy meeting, they held rates, there was actually a less strong language used about the exchange rate, so that boosted the Kiwi. But let's begin with the dollar and the dollar yen pair. Here in the chart we can see that the dollar has been drifting gradually lower, currently trading at 111.12 yen, although overall it's been fairly steady this past week. The main reason why the latest sell-off in oil prices has hurt the US dollar and US yields is due to its potential negative impact on inflation. We're also seeing the yield curve for US Treasuries flatten over the past few days, so that's cast some doubt on the Fed's rate hike path, where they want to continue raising rates gradually. We also had some fairly mixed signals coming from several Fed policymakers, some of which are a bit more cautious about raising rates again later this year, although overall it does appear to be that majority of FOMC members are supporting a rate hike, a third rate hike in 2017. We also had the Bank of Japan Deputy Governor Iwata speaking today. He said there's absolutely no need to raise interest rates in the near future, although the yen saw little reaction to that. In fact, the yen is moving higher, mainly due to that risk of sentiment, and gold as well. Yesterday it had touched a 5-week low. It's climbed back about $1,250 an ounce. But in purple in the chart we can see US crude. Yesterday it fell to a 10-month low, touching $42 an ounce. Brent crude, though, was although it did touch a fresh low, it was a 7-month low, so Brent is doing a little bit better, but the main reason why US crude fell more is because although US inventories did fall more than expected last week, US output continued to rise, hitting 9.35 million barrels per day. That's actually not too far from the levels we see from other major producers such as Russia and Saudi Arabia, and overall rising output elsewhere such as Libya and Nigeria, that's continuing to weigh on markets, as there's no sign yet that the supply glut is easing away in any way. But let's move on to the UK pound. We can see that the pound actually was lifted higher yesterday. Early in the week, the pound did come under heavy pressure after Mark Carney, the Bank of England governor, said that now is not the time to be raising rates. And Andy Haldane, who is the chief economist of the Bank of England, it was actually usually dovish. He surprised markets when he said that he would potentially vote for a rate hike in the second half of this year. So that lifted the sterling back by $1.27, although at the moment it's come off those highs a little bit, trading around 1.2660. So that we are seeing rather an unusually strong split within the MPC, and so it's actually unclear whether or not other MPC members would join the hawks within the MPC, and whether we will see a rate hike this year or not. Also worth mentioning, we had the Queen's speech yesterday, where Prime Minister Theresa May outlined her program for the next 2 years in the UK Parliament. Most of the bills were Brexit related, and we also saw a plan to create a new customs regime for the UK, and this is an indication that the UK will likely be leaving the EU customs union, suggesting the government is sticking to its hard Brexit plans. Let's look at the Kiwi now, because we see quite a bit of fluctuation around about the RBNZ announcement, where they kept rates at 1.75%. The RBNZ also maintained its neutral outlook and upward view on the economy, although the reason why we saw the Kiwi head higher afterwards, it's currently trading just above $0.7250 is because the RBNZ actually toned down its comments regarding the exchange rate. Normally it's said that a lower exchange rate is needed to support the outlook for growth. It's needed to rebalance the growth. Now it's saying that it would be helpful to have a lower exchange rate. So that's actually a slightly toned down view there. Also, they also mentioned about the government's budget plans for the very first time, saying the government spending program should support the outlook for growth. So overall, it's looking good for the New Zealand economy and the Kiwi, which is heading back towards last week's 4-month highs. A quick look at now commodity currencies. Both the Aussie and the Loonie have been hurt by the sell-off in oil prices, as well as the wider drop in commodity prices. We're also seeing iron ore prices fall further as well, so that's hurting the Aussie, which is currently trading around 0.7550 against the US dollar. That's a 1-week low. The US dollar against the Canadian dollar is back about 1.33, although overall the Loonie is finding some support from the more hawkish Bank of Canada, so that's kind of capping the Loonie's weakness when we're seeing this heavy pressure on oil prices. Moving on to today's economic calendar, we did just have the central bank decision by Norway's central bank. They maintained rates at 0.5%. We saw the Norwegian krone rise around about 0.5% against both the dollar and the euro, because the Norwegian central bank is a bit more positive on the growth outlook for the Norwegian economy. In other data, it's looking a fairly quiet day. Once again, today we've got retail sales out of Canada and weekly jobless claims out of the US, and later on we're going to have the flash consumer confidence index out of the Eurozone. In terms of speakers, we've got Fed Governor Jerome Powell speaking later at 14 hours GMT, and Bank of England MPC member Christine Forbes at 18 hours GMT. That's it from me. Thank you very much for watching, and have a great day.